A tough economy has a lot of Americans looking to make ends meet by taking out a reverse mortgage. Here with some advice on the pros and cons is our financial contributor, Vera Gibbons. Good morning, Vera.
Good morning, Julie.
All right, what is a reverse mortgage?
Right, this is a special type of loan, a government-insured loan, where you're converting your home's equity into cash. So unlike a traditional mortgage where you're making payments to the lender's making payments to you. The size of the payments depends on how much equity you've got in the home, the value of your home, the age at the time of the application. And you get this money any number of ways. A lump sum, monthly installments, a line of credit, or a combination of these methods. And there's no repayment until you actually sell the home, move out of the home, or die.
It sounds pretty good. Can anyone do this?
Well, there are some requirements. You have to be 62 years of age or older. You have to have a lot of equity in the home. So either you own the home outright or you've got a small balance remaining on the mortgage. So there are a few things to think about if you're considering this.
All right, let's talk about the pros and cons of this, starting with the pros. Who is this good for? Why is it good?
Well, the reason so many people are doing it, quite honestly, is because they need the cash. They've lost a lot of money in the stock market. Their accounts have been wiped out. So they need the cash infusion. That's why they're doing this.
Their back is up against the wall.
Right. They can't get a loan, perhaps. They can't do a refi because of the continuing credit crunch. So this is actually a way around this. No income requirements, so you could technically have no income. Credit requirements are minimal, so this is definitely a way around that. This is why people are doing it.
So
they need the money.
All right, so what's the catch? What's the downside? If you have to do this and you're doing it, what should you be aware of?
Well, these loans are very expensive. I mean, they can cost you up to 10% of the value of the home over the course of the loan in fees. All sorts of upfront fees, from origination fees, appraisals, titles, insurance premium. They really do add up, potentially thousands of dollars. So I think people really could be overwhelmed by these fees. Also keep in mind that if you intend to leave your house outright to your heirs, this is not for you. And you are still going to be responsible for property taxes, for the maintenance of the home. Something to think about.
Does this mean if you wanted to leave your home to your heirs, if you do this, you simply cannot?
Well, they would actually have to pick up the tab. So if you want to leave your home outright to your heirs, free and clear, you cannot do this. But they're going to give you the cash, and you can do whatever you want with the cash. Go and fund your retirement if you want.
Right.
So that's one of the main draws, is people just need the cash infusion.
But what about alternatives? Why not just sell the house or rent out the house and get income that way?
That's a very good point. I mean, this, Julie, is a loan of last resort. People have exhausted those options. They can't rent the house. They can't sell the house. They can't downsize. They've exhausted their options, so they're doing this.
Oh, so this really sounds like a last resort thing.
Well, I mean, driving the volume is the bad economy, and they're doing about 10,000 of these loans each and every month right now because of the bad economy.
That's incredible.
Yeah.
Vera Gibbons, thank you.
Thanks, Julie.
Thanks for the warning.